Guys, welcome back to our YouTube channel. This is Harold from the CoffeeFX, and if you've been with us for a while, you will know we produce quality content on this channel. So before we continue, don't forget to hit that subscribe button so that you won't miss out on any other content we release on this page, guys. So as promised, I'm bringing to you the complete I Am a Beginner course that will help you as a beginner to know some strategies and some patterns you can use to trade the forex market every now and then, guys. So without wasting my time, let's get straight to the video. Okay guys, so before we continue, remember in our last video, that is how I caught 700 pips on US30. At the end of the video, I gave you a trade on US30. That was a sell trade. So let's go back and let me review that trade I took. So this was the trade I gave you guys in our last video. I told you that the price was moving to the downside like this, and it was in like some kind of a bearish flag. It broke out of the bearish flag. I got my entry and I took my sells to the downside, as you can see. And it was also some kind of an M pattern over here, break and a retest and going to the downside. Obviously price was in a downtrend, so like every confluence was just on point. So I took this trade over here. That was about 560 pips, 577 pips. Okay, that's it over there, 577 pips. So guys, that's it. We hit take profits on US30. So let's just get straight to today's video. So let's just list the things we are going to talk about. So today we are talking about the I am a beginner complete course. Let me put that in brackets, complete course. Okay, very good. Complete course. Let me make this black. It looks better that way. Okay, I am a beginner complete course. So the first thing we are going to be talking about is what? Tradingview tools. Okay, so for Tradingview tools, I gave you a couple of very useful Tradingview tools we normally use. So the first one is what, the trend line. Okay, so you can find all your Tradingview tools at the left side of your screen. You can see that you find all the tools over here. So with every tool you see over here, there's a small arrow beside it. You click on that arrow, you have access to like the other tools over there. So let me show you an example. Let me change this also to black. I like black a lot because it makes my charts look very professional. So when you click on the arrows, you find a lot of tools over there. You can see trend line, ray, info line, extended line, trend angle, horizontal line, a lot of them, a whole lot of them, you see a whole lot of them. So guys, when you look at it, you see that I have marked some of them with some stars. So you just put your cursor on the tool like this. You have the star, you click on the star, and then it will be added to your favorites on your screen. This is where you find the favorites. You can see my favorites are over here. So when you click on it, you see that. Let me bring it to the screen so you can see it. So when you click on the style to either add it to it or remove to it, you can see added and removed, as you can see. So you can just go through all my tools on my screen, and you can also add them to your favorites on your screen. You understand? Okay, so we're done with the Tradingview tools. I didn't want to go too much into detail. As time goes on, you know how and when we use them. Okay, so let's go to the next thing, which is what? Market structure. Okay, so let me write it down. Number one, trading view tools. Number two, which is what? Market structure. So on episode 1 we did Tradingview tools. Episode 2 we did what? Market structure. Okay, so let's talk about market structure. Okay, so I told you that we have market structure is simply like how the market moves. Okay, how the market moves. Let me take this off also so you can see everything clearly. So market structure is simply how the market moves. You understand? And we have three trends at which the market moves in. So we have the uptrend, we have the downtrend, and we have the what? Consolidating or ranging market. Let me write that down also for you. There's a course, so don't worry, everything will be detailed down for you so you can just take some notes. Uptrend, then we have what? Downtrend over here, and we have what? consolidating, or ranging. Okay, let me put that also over here. Consolidating or ranging, guys. Let me bring this here. So we have these three types of trends. So in an uptrend, the market creates what we call what? Higher highs and higher lows. For those who have been joining us in the I Am a Beginner live sessions every morning at 8:30 a.m. GMT, you know what higher highs and higher lows are. So let me just, for the sake of those who are in there, let me just go through with this. So we have what we call the higher low, higher high, higher low, higher high, higher low, higher high. Very good. So when the market's moving to the upside, this is how the market moves. As you can see, it moves creating what we call higher low, higher high, higher low, higher high, higher low, higher high. Let me even label that out for you guys. Higher low and what? Higher high. Very good. So we have higher low and higher high. Let me drag this out. Let me label it fully so that you guys can also, guys, take note of this so you can draw it out in your notebooks. Draw it out in your notebooks and label it. Okay. Very good. So you can see the market goes in what? Higher low, higher high, higher low, higher high, higher low, higher high, and what? In an uptrend when the market is going up. Let me put the arrow here so you guys can see that also. When the market is going up, it moves this way, and when the market is going down, it moves this way. It moves in what? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is how the market moves when it's going down. So let me label that also. Lower high and what? Lower low over here. Okay, very good. Now let me drag them. Copy. Okay. So I'll tell you why we call them lower high and lower low and higher high and higher low in a minute. Let me just finish labeling this and I'll tell you why we call them that. Okay, so the reason why we call this lower high and this lower low is because consistently you can see that the market is moving to what? Creating what? Lower highs. Even though there's a high, there's a high, there's a high, there's a high, consistently it's what? It's going lower than the previous one. You can see this low goes lower than this one, this high goes lower than this one, this high also goes lower than this goes lower than this, calling it a what? A lower high. And for the lows, the same thing. Lower low, lower low, lower low. You can see the lows are going lower than the previous ones. Do you understand? And looking at the higher high and higher low also, you can see that the highs are consistently what? Going higher than the previous high. You can see this high has gone higher than this high has gone higher than this. And for the lows too, you can see they are all lows, but consistently what is happening? The lows are going what? Higher than the previous lows. You can see this low goes higher than this low goes higher than this one. You can see that's why we call them what? Lower highs and lower lows, and what? Higher highs and higher lows. So we use this also what? In a downtrend, when the market is going to the downside. Very good. So this is for market structure. Okay, this is for market structure. Let's go to the next one, which is what? Support and what? Resistance, guys. Support and resistance. Okay, so when we talk about support and resistance are the mother and father of trading. Do you understand? If you don't understand the concept of support and resistance, I don't think you are going to understand anything in trading at all. Do you get it? Support and resistance are the mother and father of trading. So looking at it, we have what we call support. Support is a zone or a level where the market bounces to the upside. So let me write that down. Bounce to upside. And resistance, the market rejects it to the downside. Okay, let me write that down also. Rejects to the downside, guys. Okay, so these are the two things that happen at the support and resistance. So you can see some of us call the support what? Our floor of the market, and the resistance what? Our roof of the market. Do you understand? So we have, when you can draw support and resistance in two forms. Okay, we have two forms at which you can draw support and resistance. You can use the box like this, and you can use a line, any line at all like this. Let me change this also to black. You can use any line at all like this. So support, when you use a box or like a rectangle to draw the support and resistance, we call it what? A zone. Okay, we call it a zone because it's covering a whole area, so we call it a zone. And when you use a line, we call it a what? A level. Okay, we call it a level, guys. We call it a level. So here we'll call this what? A support zone or a resistance zone, and over here we'll call it what? A support level or what? A resistance level. Do you understand? So let me show you the practical aspect of what happens with support and resistance. After I've taken you through everything, I'll take you to the main chart so that we can just look at every topic we talked about, the representation of every topic we talked about in the real chart. You understand? Over here I just want to show you the demonstration. You get it? So we have two zones over here. Two zones over here. So since we have two zones, one at the top, one at the bottom, I taught you that our support is our floor. So obviously this is our floor. So we call this support. And we call this what? Resistance. Okay, very good. Okay, I made a mistake over here. Resistance, guys. We call this resistance. So the market moves this way. Anytime the market touches the support, what happens? It goes to the upside. Anytime the market touches the support, what happens? It goes to the upside. If it touches the resistance, it comes to the downside. If it touches the resistance, it comes to the downside. Do you understand? Those are the two reactions that happen. Don't ever overthink this. These are the two reactions that happen. Okay, and we have something we call the inverse reaction. Okay, so the inverse reaction is what we call what? The break and a retest. Okay, break and retest. Very good. So the inverse reaction is what we call break and retest. So instead of price like coming to the support and bouncing to the upside, it breaks the support, it retests the support and does the inverse of this. Instead of going to the upside, it goes to the downside. Do you see this? And instead of price coming to the resistance and bouncing to the downside, it breaks the resistance like this, retests the resistance, and then goes to the upside like this. So this is what we call the inverse reaction, or the break and the retest. Do you understand? So that's for support and resistance. Very good. So let's go to the next thing we have. The next thing we have, guys, our topic is way down here. So the next thing we have is what we call trend line. Okay, the next thing we have is what? Trend line. Okay, trend line. Let me bring the topics to the top. I'm dragging the topics to the top so that we won't come down again, because you're going to use a huge space of the screen. So we have what we call what? Trend line. Okay, so trend line is basically used to draw the trend of the market. You can see I thought we have three trends: uptrend, downtrend, and more consolidating market. So we actually use the trend line to like allocate the trend of the market as what? A support or a resistance for the market when it's going up. So you can see I told you the market creates what? Lower highs, higher low, higher high, higher low, higher high, higher low, and what? Higher high. So over here, if you want to draw your trend line, you go to the toolbox, your second toolbox where you have your lines. You click on the arrow, you will find the trend line over here. You can click on the star to add it to your favorites. So you click on the trend line, you mark it out. When drawing an uptrend, you draw it from what? The bottom. Okay, you draw it from the bottoms. You don't use the highs, you draw it from the bottoms. Click on your trend line, and you need 2 touches or more for a valid trend line. 2 touches or more for a valid trend line or a valid zone. For valid zones, valid levels, and valid trend line, you need what? 2 touches or more, guys. Keep that in mind. So we have our first touch over here, second touch over here, and our third touch. So guys, remember, you can make the trend line cut across like this, but not too much like this. Just cut across a little so that you can get a third touch. You understand? And it doesn't matter if you mark it out on a wick or a body. Just make sure it is touching it. You get it? So this is how you draw an uptrend. Okay? And let me show you how you draw a downtrend, guys. Price creating what? Lower high, lower low, lower high, lower low, lower high, lower low. So with this one, you don't use the bottoms, you use the what? The highs. Okay, you use the highs. So you draw it like this. First touch, second touch, third touch, like this. You can see this is a downtrend, a very, very solid downtrend. So that's for the trend line, guys. This is how you draw a trend line. Okay, so now I'm going to show you how to use support and resistance as a confluence. Okay, that's day 5. We learned how to use support and resistance as confluence, guys. So how to use support and resistance as confluence is basically using your market structure in cooperation with the support and resistance and what trend line. Okay, I forgot to add a trend line over here. How to use support and resistance and trend line as confluence. Very good. This is it. How to use support and resistance and also trend line as well as confluence. Okay, so basically what this is that let's use the old chart we drew. So over here, anytime the market creates a low, we have a what support at that low. In an uptrend, we have a support at that low, and if you create a high, we have a what a resistance at that high. You understand? A resistance at that high. So over here, we have another support over here. We have another support over here, and we have what a resistance over here. You get it? Anytime the market is in a trend form like this, so you can see when the market is moving, you can just drag out a support or drag in the uptrend, you drag out your resistance like this. Anytime the market creates a high, you drag the resistance out like this. Let me delete this one. You drag your resistance out like this. You understand? So you can see consistently what is happening. We have another one over here. Let me draw this out. So we delete this one. We have another resistance over there. So consistently what is happening, the market breaks this, comes back to retest the trend line as well as the resistance. This is the inverse reaction I'm talking about, because this is a resistance. Now it has broken out of the resistance, retested as a support, and you can see it goes to the upside, creates another high, comes down, break that high. As you can see, it has broken the high over here, come back to retest, and it's going to the upside. So that's what happens. It breaks, you wait for a retest on that trend line as well as the support, then you take your buy. You understand? You get your confirmation, then you take your buy. That's how you do it. Get your confirmation, you take your buy. Sorry, I wasn't meant to delete that. Then you take your buy. That's how the market moves. And when it's moving in the downtrend, you have your lows as your what support. You have your lows as your support. So remember, when it's in an uptrend, you use the highs to draw your resistance when you want to catch a trade. But when it's in a downtrend, you use the lows to draw your support when you want to catch a trade. So you can see for the lows also, same break and retest, same break and retest, same break and retest. You can see the market broke the support, came back to retest as resistance, retesting the trend line also, went to the downside, broke this support also, came back to retest, went to the downside. It has broken this support. So what do you expect? We expect a retest over here, we get our confirmation, then we sell. That's it. As easy as that, guys. As easy as that. So the next thing we talked about was what? The next thing we talked about was on day 6, we talked about what? Confirmations. Okay, confirmations. So let me write it like this: chart and candlestick patterns. Into bracket what? Confirmations. So these are the confirmations you look out for before you enter a trade. Do you understand? If you want to enter a trade, these are the confirmations you keep an eye for when you want to, like, when price gets to your zone, you wait to see whether you have a chart pattern over there, you have a chart pattern over there, or you have a candlestick pattern over there to get your confirmation to enter the trade. And mostly this thing is found in the what? In the 4-hour time frame. Keep that in mind. It is found in the what? 4-hour time frame. It's very, very valid in the 4-hour time frame. Market structure, chart patterns, and candlestick patterns are very, very valid in the 4-hour time frame. You understand? Very good. So we have 4 main types of, like, the 4 main candlestick patterns we use. So let me write it down: 4 main candlestick pattern. For those who like joined us during the live, you find this very easy. So we have the what? Bullish engulfing. We have the what? Bearish engulfing. Hold on, guys. Let me label this too. We have the morning star and what? Evening star, guys. So these are the 4 main chart patterns we use to trade. That's what the CoffeeFX uses to trade. So for those who want to trade like the CoffeeFX and stuff, I want to be like, this is what we use. We don't go beyond this. We don't like to complicate our trading at all. This is what we use. Okay, so let's get straight to the explanation of these. So we have the bullish engulfing, guys. We have the bullish engulfing. That's when we have a small bearish candle and then another bullish candle opens and just closes that whole bearish candle. It covers that whole bearish candle. Another meaning of engulf is what? Cover. You get it, to cover. So it opens, the bearish candle opens. Okay, we are talking about bullish engulfing. Okay, so hold on, I made a mistake. So it covers it like this. Very good. It covers it like this. So we have a small bearish candle like this, and then the bullish candle opens and covers it like this. Covers that whole bearish candle. You get it? And for the bearish engulfing, we have a small bullish candle like this, and we have the what? The bearish candle covering it like this. Simple as that. Let me change the colors for those who want to be conversant with it. Let me change the colors. Some of you won't get what I'm saying, so let me change it. Okay, very good. Okay, so this is the bearish engulfing and this is the bullish engulfing, guys. Bearish engulfing and bullish engulfing. So now let me draw the morning star and evening star. So for the morning star, it's like a U. Okay, the morning star is like a U. Let me see whether I can, yeah, the curve. Okay, the morning star goes like this, meaning it's going to the upside. So obviously use the bullish engulfing when you are buying and use the bearish engulfing when you are selling, when price gets to your zone. And the morning star, since it's like a U going to the upside, obviously use it for what? When you are buying. You understand? Use that for when you're buying. So let me draw that out. So that's when you have a bearish candle like this, and then you have a small candle in the middle, whether bullish or bearish, like this, and then there's a wick in that candlestick. Okay, there's a wick in it like this, like this. And then we have what? A bullish candle going up like this. Okay, let me change the color also. We have a bullish candle going up like this. So this is what we call the morning star candlestick pattern. Okay, you can see the bearish candle like this, and the small one and the bullish one going to the upside. This is what we call the morning star. Okay, and for the hold on, for the evening star, it's like an N, like this. The evening star is like an N, like this. That's when you have what? A bullish candle like this, a bullish candle like this, and then you have what? A bearish candle or a bullish candle with a wick in the middle like this. In the middle like this, and then you have what? A bearish candle going to the downside like this. So this is for the evening star. Okay, so these are the four main chart patterns we use, the four main candlestick patterns we use when price gets to our zones. Okay, and remember, the key to having the correct pattern is waiting for the candlestick to close. Don't rush into taking the trade. Wait for the candlestick to do what? To close, guys. Wait for the candlestick to close. Very good. So let's go to the other one, which is the chart pattern. So for chart patterns, we have 8 main types of chart patterns. Okay, so 8 main chart patterns. 8 main chart patterns, guys. So we have the 8 main chart patterns. So number 1, we have the what? Bullish flag. We have the what? Bearish flag. 2, we have the bearish flag. Number 3, we have the what? Bullish pennant. And number 4, we have the what? Bearish pennant, guys. Number 5, we have the M pattern. Number 6, we have the what? W pattern. For those who were here, for those who watched the previous video, which is what? How I caught 700 pips on US30, I taught you guys the 8 main chart patterns. Okay, I taught you guys the 8 main chart patterns. And then number 7, we have what? The heads and shoulder pattern, which is the H and S. And number 8, we have the what? We have the inverse heads and shoulder pattern, guys. We have the inverse heads and shoulder pattern, guys. So these are the 8 main chart patterns we have when it comes to trading, like the CoffeeFX. So let's go. Let me give you the demonstration for them. So bullish flag. So bullish flag is when you have a bullish move to the upside, a move to the upside, and then the market consolidates to the downside like this before breaking out to the upside. Okay, this is what we call a bullish flag. So you have your channel covering the flag like this, the consolidation to the downside like this, and then we have what, the bearish flag also, which is when the market is moving to the downside and start consolidating to the upside like this, start consolidating to the upside, and then breaks out to the downside like this. Okay, breaks out to the downside like this. It breaks out to the downside, so it consolidates to the upside for a while and then breaks out to the downside like this. So let me draw that out, guys. So consolidate, breaks out like this. Yes, so this is the consolidation we have. And then after that we have what, the bearish pennant, which is like this, the market consolidates in a triangular form like this, triangular form, and then breaks out to the downside. Okay, consolidates in a triangular form and then breaks out to what, the downside, guys. So this is it. This is how you get the bearish pennant. And then we have the bullish pennant, when the market consolidates, goes to the upside and consolidates in a triangular form like this, breaks out to the upside. Simple as that, guys. Simple as that. So this is the bullish pennant and bearish pennant, as you can see. And then what do we have next? The M pattern. Obviously the M pattern, market creates an M pattern like this, breaks the neckline, comes to retest the neckline, and goes to the where the M pattern began. That's where your take profit should be. As I always say, that's where your take profit should be, guys. Let me draw this out again. M pattern, break, retest on the neckline, comes here. That's where your take profit should be. And W pattern like this, break, retest on the neckline, and goes to the upside. So let me show you where the break is. Okay, so this obviously what, an inverse reaction. Price is supposed to bounce and go up, but it breaks it and retests and goes to the downside, giving you an M pattern. And then the W pattern also like this, a break and a retest, inverse reaction, as you can see. And then we have the what, the heads and shoulder pattern, when price creates it like this, comes back to end. Then this is where your entry will be, over here, to retest this place, and then you'll take profits over here like this. Very good. So let me mark out that entry also, get your confirmation, then you sell it. Okay, then we have the inverse heads and shoulder also like this. Price comes to the entry point, get your confirmation, you buy like this. This is the entry point. Very good, guys. So these are the 8 main chart patterns we have. You understand? These are the 8 main chart patterns we have. And the last thing we talked about was how to mark out an entry. How to mark an entry, guys. How to mark an entry. So if you want to mark an entry, we have 2 types of entry. We have the long entry and what? The short entry. So the long one is for when you're buying, and the short one is for what? When you're selling. You understand? So this is how it looks like. If you want to find the entry, you come to the left side, the toolbox. You find it at the first, second, third, fourth, fifth, the fifth toolbox. So you can click there. You see long position and short position. You can add a star to them so that they will be on your screen. So let me put the long position over here. After that, let me get the short position and also put it over here, guys. So as you can see, with the long position, you find what we call stops over here. That's where your SL in pips is. This is where the pips is. You see the pips stop. That's your SL. This is when you're buying, and this is where you have your risk to reward over here. This is a 1:1. If you extend, you see that it increases. You can see that. So this is your risk to reward, and your take profit in pips will be over here. You can see target pips. Okay, this is for your long position when you're buying. When you're selling, this is your stop loss is over here. Your pips is over here. You can find the risk to reward over here. You can find the take profit pips over here, guys. So if you double click on it, you get the details. You get the entry price and the stop loss price and the take profit price. Okay, same for the selling also. You get the entry price over here, price. Simple as that. So that's how you mark out your entry, guys. So this is the whole I am a beginner complete course, guys. So thank you for staying this long. For those who want to know more, you can enroll for our mentorship so that we can teach you the extended version. For those who want to enroll for one-on-one sessions, maybe you think the group sessions won't be okay for you, we have the link in the description. You can click the link in the description and we'll attend to you, we'll enroll you. And we also have a free Telegram channel where we post signals each and every day, guys. Don't forget to like, share and subscribe if this video has been helpful to you. I thank you for staying this long. This is Harold from the CoffeeFX signing out.